Hello, ladies and gentlemen. Welcome to another edition of Capital Concepts. I'm Jeff Schuler, Director of Research and Chief Analyst here at Spectre Consulting in Deerfield Beach, Florida. This again is our training room where we train our brokers. We get them up to speed on what's going on in the investment world and all the things that impact precious metals and our clients' money. But also, we entertain and discuss these same type of things with individuals that come in and meet with us, as well as small groups. Today, for this segment, I want to discuss what I call, and C.S. Lewis, please forgive me, I call it the Fed, the wish, and the warning. Start with the Fed. The Federal Reserve right now is being faced with pressure to allow itself to be audited. It's fighting it. As a matter of fact, there's a House bill and a Senate bill, talked about it in another episode of Capital Concepts, that is being pushed, and they've hired lobbyists. High-powered lobbyists spending a lot of money trying to get that not done, get those bills defeated. What is it they're trying to hide? What is it that they don't want people to know? Well, that'll be part of the wish. But the one thing we do know is that the Fed's been a major buyer of treasuries. And that dollar amount is running out. They only have about $2 billion and $300 billion left. We've got a treasury auction coming up. It's going to be ugly. It's probably going to be ugly, let's put it that way. I expect it to be not so pretty. The other thing is, the Fed has been espousing, to help stimulate this economy, a zero interest rate policy, a zero interest rate bank-to-bank overnight, pretty much giving money away to banks. The idea is that the banks will then turn around and lend that money out and become more profitable on a systemic basis. But is that happening? No. The banks aren't lending that money out. The banks are investing that money in derivatives, and they're taking profits that way. Is that a systemic profit system? No. It's a quarter-to-quarter profit system that if it goes the other way, take J.P. Morgan. They've got a $68 trillion exposure to credit risk, to credit swaps. Does that sound like systemic earnings? No, it doesn't. Systemic earnings are when these banks borrow money from the Fed, they lend it out to companies and to individuals at prime, etc., and they make the spread. That's good, sound banking. Are they doing it? No. But the Fed has to do this to help keep interest rates down so our real estate market can hopefully come back and keep these companies making money. So they're trying to hope and wish on this. Now, what all this has done is caused a budget deficit that is 12% of GDP, this multi-trillion-dollar deficit. Now, historically, deficits have run, excluding World War I, World War II, and the Great Depression, 0.3%. 0.3%. Now, under the Bush administration, that last deficit that he racked up, trying to revive the economy, which worked for a bit, brought it up to about 2%, 2.3%, and boy, did they howl. Same Ben Bernanke, same Geithner, all howling. End of the world. Now, 12%? That's the Fed. The wish is that the consumer can remain ignorant, that the consumer doesn't know what's really going on, that you don't know that our banks are running at a deficit, that they're not reporting their losses, that they're fudging numbers because they're being allowed to, that they're getting money from the Fed for nothing, and they're buying highly risky credit default swaps and things along those lines that are so esoteric and so impossible for most people to understand that even the people that started it, even the guy who started it, is sitting there scratching his head saying, this isn't what I wanted to do. I wanted to help J.P. Morgan keep their risks down, spread it out a little bit, not create this boondoggle. The warning, ladies and gentlemen, the warning is this. We face the same situation we did in 1929, only it's worse. In 1929, we had a run on the banks because people wanted to get their money out, gold and silver, and they were getting paper instead. And they realized very quickly that the banks didn't have their money. They invested it. But it wasn't in anything close to being liquid. It was in stocks that were leveraged 90%. And that helped lead to stock market crash. And of course, the banks all fell apart because of that, led to the Great Depression. Today, we have the same interconnections between banks, brokerage firms, and insurance companies. Only investments are in stocks at 90%. They're derivatives at 100 to 1 or 1,000 to 1. They're a lot more complicated, and in 1929. We had the gold standard to help at least protect our currency. We don't have that anymore. 1979, we had stagflation. We had interest rates go to 20.5%. Thank you, Mr. Volcker. At least he capped what was going on. He did what was necessary. I don't want to go through that again. But we had 14% inflation. Remember, that's the 1980s when they changed the rules on inflation? Today's inflation would be 6.1% based upon 1980 calculations. Today they're showing what? Half a point, 1 point? Yeah, you believe it, I don't. That's the warning. But the good news is this. The opportunity is this. The Fed, the wish, the warning is that in the years ensuing 1929 to 1935, people that bought gold, people that bought silver, ended up becoming millionaires. More millionaires were created because of that buying between those years, because they maintained their buying power while everything else fell apart, while the Depression went its way. They were able then to buy in to other hard assets through the sale of gold and silver and made themselves multimillionaires in real terms. 1979, from this time period, October, until January of 1980, more millionaires were created than in the stock market boom of 2002 to 2007. That's a fact. Right now we have that same opportunity. The question is, what are you doing about it? The Fed, the wish, the warning. Take advantage of it. We have a lot of opportunities. The question is, are you going to take advantage of it? Ladies and gentlemen, I hope this has stimulated some thought. Hope you take it to heart. Hope you have an absolutely fantastic day. Until we next speak again, may God bless you all.